The Hedgeless Horseman here. It's November the 14th, 2024. I will try to cover some news. I haven't covered much news since, about, I would say 3 weeks ago or something. Since before the Florida conference, and then, as I said in the last video, I got sick. First of all, thanks to the sponsors. Markets, metals are, well, they're down, but they're recovering actually a bit. Stock market that has been on fire is actually retreating, and crypto is kind of retreating as well. So it's like, I mean, this is just daily noise and all that, but still, I do find it again interesting that you have the US markets go like this, so they're keeling over, okay, gold actually recovering. So I mean, just kind of goes to show a bit that they are in fact not just super correlated, that when there's some risk off, gold can actually trade the opposite way, whereas mostly crypto follows the Nasdaq if it's risk off. And like all of the cryptos are red right now, which again just goes to show, I mean, it's a total broad-based trading sardine thing. I mean, and that's why you also see that in juniors. I mean, when let's say there's a good market day, or people are positive for some reason, I mean, you see pretty much every junior up. On a bad day, almost every junior is down. Even though it's like almost none of the juniors actually put out some news. Doesn't really matter what, if gold and silver is up or down 1% per day. But it's just a herd type behavior, and just shows that again, a lot of people, if metals are down today, they sell because they think it's going to go down tomorrow, and somebody's going to sell it even lower tomorrow, so they want to sell now. And typically, I mean, I would say it's mostly flip a coin. If gold is down today, I wouldn't be surprised if it's up tomorrow. If gold is up tomorrow, I wouldn't be surprised if it's down the next day. Yet you have a bunch of people, majority of people, if gold is up, they buy. That's why juniors go up, because they think they're going to go higher tomorrow. If gold is down, they sell today because they think it's going to be lower tomorrow. I mean, that's what actually drives the marginal. That's how the marginal investor operates. That's why you see all these ridiculous swings. It's absolutely crazy. It has nothing to do really with the companies or the value of the company or anything like that. It's just people treating the market and companies like trading sardines. Let's face it. I mean, let's say silver's down 1% today. See some silver junior go down 5%. So that means, I mean, if we're to trust the efficient market hypothesis, that means that all the value, all the long-term intrinsic value of the company dropped 5% if the market was efficient. How is that possible? If silver is down 1% on one day, how on earth can a whole company's long-term value go down 5%? I mean, it makes no sense. But that's how it is. Let's look at some news. First of all, i80. It's like I saw the news when it came out, and I just basically skimmed it. But it's like strategic overview. I think they mentioned that I think they say I thought it negative impact productivity, mining rates, yada yada. So I mean, their small scale production doesn't seem to be doing that well, and I think they said something about negative working capital, but companies' working capital deficit. So I mean, financially, i80 has shit the bed basically. That's what's been so, in a sense, frustrating with i80. And I think it also goes to show the importance, or let's say how management can affect things. First of all, they have, I mean, how many? They have, I mean, insane sunk cost. They own a roaster that they bought from Newmont, I think, or maybe it was Barrick. They have a bunch of advanced projects, gold projects in Nevada. They have the CRD potential at Ruby Hill as well. So like, they have several assets that look pretty good, some better than others, and they are quite advanced. And they have, like, you know, production infrastructure in Nevada of all places. And almost as long as I can remember, or at least the last 1-2 years, it's always traded very cheap relative to the sum of the parts. I would say, I mean, they have, I think, about 12 million ounces. I haven't refreshed my memory on i80 that recently, but it's like, I think they have around, you know, 100 million ounces of silver, 12 million ounces of gold or something like that, and obvious exploration potential everywhere, since they put out some very good news releases now and then. So you have, like, I don't know, 4 or 5 projects, advanced assets, permits, a production facility, and they've always traded like they don't have, you know, one good mine. But they also had a lot of debt, and the thing is that it appears, I mean, if you look at the news flow, for example, like, I think maybe i80 has tried to, you know, taken a too big of a bite, let's say, chew on too many things. I can't remember how the saying goes, but it's like almost like they're working, you know, 4 projects at the same time with debt and small scale production, which is not, you know, doing very well. And I think there's been some cost inflation, especially maybe in Nevada. I mean, I've seen people talk about how the Nevada gold mines operations, that there's constant, like, cost creep. So maybe it's quite a hard environment from a cost perspective in Nevada. Not 100% sure, but it doesn't seem like their, you know, production is going that well. So I mean, if you're, let's say, and I haven't looked into the numbers, but let's say you're losing money on your small scale production, plus you're pushing 4 projects forward at the same time with debt. I mean, that's obviously a lot of cash burn, and especially in this type of environment, that's what people look at. I mean, you know, the juniors with that, let's say, do a lot of stuff, so they're burning a lot of cash. I mean, when the market sniffs out that the, you know, oh, the access to capital is not there anymore, it's like, oh, they're gonna have a hard time, you know, raising money. I mean, they get absolutely slaughtered. I mean, if this was if the gold sector was really, really hot, I think this story would be totally different. People would be throwing money at them. They might not have big problems in terms of, you know, pushing 4 projects forward while raising money to you know, upscale the production or build one of the mines. That's the hard part, I would say, with the junior sector, and I don't envy being a CEO of a junior, because the same case can look completely different depending on the market sentiment and access to capital. We see that in juniors again all the time. It's like, when the sector cares about results, when people appreciate, let's say, value, or like the potential of value creation, you get a lot for the value creation, let's say. I mean, you drill, you get rewarded, have an easier time taking in money, people get positive, so it's even easier to raise money, so you can do even more stuff. When that flips, it's completely different. Like, maybe the success you had gets cut down by 70% in terms of the market pricing it. You have a harder time raising money, and people see the share price going down, so they're selling and less likely to buy, because nobody wants to buy low. Everybody wants to buy high and sell higher. So it's like a rug pull, and all of a sudden, I mean, again, if we were in like 2016, 17 top junior sentiment levels, almost every junior out there will be trading a lot higher, will have better access to capital, and that's of course impossible to foresee. So I mean, I'm not gonna try to be an armchair CEO here and say, oh, I know exactly what they did wrong, whatever. Again, there's a lot of stuff out there like sentiment that no company can control, the market sentiment. So I mean, it's always easy in hindsight seeing a result and then saying, well, they shouldn't have spent this much money on so many projects, whatever. But if the sentiment was good, maybe that's exactly what they should have. Or if the sentiment turned a lot quicker, like 1-2 years ago, this is exactly what they should have been doing. So I don't want to. It's the same with results from your investments, for example. I mean, just because you made money on something doesn't mean it was a good buy, or because you lost money on something doesn't mean it was a bad buy. We just see the results. It's the same with poker or whatever. It's like you can have the best hand. You don't necessarily win all the time. And, so if you lost with aces, shouldn't you have played aces? Of course you should have played aces. It's just that not everything works out that way because there's so many unknowns and there's randomness and yada yada. Anyway, so I read the news release, like, okay, this sounds like a pretty big deal, let's say, and I didn't notice it at first. Then I looked at it, or somebody asked me about i80, and then I looked at the chart, stock. It was down like 58% or something. It's like, Jesus, okay, really, taken to the woodshed. And I couldn't help myself. I actually bought some at, like, I don't know, I put in a bid at 48 cents, I think. That didn't hit. I increased it 48.5. That didn't hit. It just started climbing a bit. Got some at like 49 cents. Thankfully, I mean, I haven't really added anything in the hodl folios for a long time, so this had already become quite a small position, and obviously now it's even smaller. And I'm not sure what to do, because I'm not a corporate financial expert. I don't know what how this is going to play out, because basically, okay, excuse me, at face value they're kind of bankrupt. I'm assuming they wouldn't get any extra money, which at the same time I kind of have a hard time seeing. Given the asset base, I mean, it's just ridiculous. If you just look at the market cap, if you factor in the debt, I don't know exactly actually how much debt they have. I find that stuff too boring. I really should have looked into it, but that's why this never was like a huge position for any portfolio, because it was a bit complex. I prefer to have, let's say, on average, simpler cases. But anyway, now we're here, so it's like, what to do? Should should I sell? Should I buy? Yada yada. Again, if I just look at the individual assets, I mean, I think they have like 4 assets that could any junior could have, would be happy to have. Almost every junior would be happy to have as a standalone flagship project. So it's like, is the value much higher than, let's say, the enterprise value right now? Yes, on a standalone basis, I would say so. But for the corporation, given their financial situation, I mean, that's basically, that's why it's so low. It's like, it's the financial picture for the company that owns the assets that looks crap. I mean, the assets themselves don't look crap. So I actually don't know how this is going to play out. I mean, do they need to do some fire sale? Do they need to sell an asset? Or do they do some predatory big raise, let's say? The big risk is, of course, there's theoretically risk that, nobody gives them money, they're not able to sell anything, and the company goes bankrupt. Despite having, good assets. What the chance of that is, I have no idea. I would think it's relatively low, but it's of course not too much fun. It's like if you sat in, you think this has been cheap. It's like you sat in it, gold is at 2,600, whatever it is. You see this, and then they have to do a fire sale of one asset, maybe that's alone actually maybe worth what the market cap is. That obviously sucks, but you'd rather amputate the leg than lose the whole body, of course. So it's a bit like red pine in a sense. So it's like I don't know how it's gonna play out in that case. It was potential legal action, whatever, and I think I've seen people talk about class action lawsuit here as well. So yeah, long story short, it's like I don't know. I mean, is it an absolute no-brainer? No. Would I bet big here? I wouldn't, because again, I don't have visibility. I want to be able to imagine what the 10 next news releases are going to be, for example. And preferably, I would want it to have almost a risk-free upside in a sense. This isn't risk-free, obviously. There's a chance. I mean, any company could go bankrupt. They are in a bad financial situation. I mean, even though they have a market cap of 205 million and have a lot of great assets, at face value right now they have a worse capital situation than most juniors out there. So in a sense, it's very, very risky, even though they have many advanced assets. So I haven't made up my mind actually, and it would take a long time, I think, to get a really good grip where I felt like comfortable to take a stand, let's say. But I might, I don't know. Again, I took I added a tiny position, so it's not a big bet in any way, shape, or form. But yeah, so I should give this some more thought. So like, am I tempted to sell? I mean, I mean, the reason I added some is because I hate selling low. That's my big fear. So I naturally hate selling after a crash. My first reaction is to buy, because anytime there's a crash, typically there's an overreaction. It's like what I did in Amex, for example. But I would say I have no strong opinion really. I mean, the opportunity cost is like, if you since any money you put in, you could have put into any other junior. So the question is this, after the crash, the very best place to put money, or are there cases that haven't crashed, they're just cheap and low risk and high upside, yada yada, that you should have more money in, or should put the money in? That's the question we should ask ourselves all the time. This especially me, since I'm all in all the time, it's like I would need to find something that is worse than this and buy. And since I don't have like a particularly strong opinion on i80, and it's a complex situation, it's very hard to get that conviction where it's like, oh no, oh, for sure it's a no-brainer down here, because this is gonna happen, that's gonna happen, then it's gonna revalue, yada yada. Yeah, so maybe not much help to anyone, but again, that's why I prefer not to have strong opinions when I don't know. It's like, I know some people who just have to have a strong opinion, and it's like if people ask them stuff, and especially if they, let's say, see themselves or want to portray themselves as experts on in this sector, it's like they I think they feel like they always have to have an opinion, because otherwise people say, oh, that guy doesn't know. I have no problem saying that I am unsure of what to do, and that's obviously the opposite of conviction. It would take some time again to dig into it, and so I don't know. I took a small stab, might take some, but again, it's like, if I have I mean, for all we know, they sort this out. Maybe they do a big raise. Yes, it's diluted, whatever, but like it gets them over the hurdle. They do some, as they say, I think it was called, what was it called? New development plan, that they're like, okay, guys, we bit off too much more than we can chew. So we're gonna go focus on one project or something like that. Keep the cash burn low. Try to get one up into future production instead of advancing everything at the same time. Because obviously the problem is that you get super discounted on any peripheral assets. That's why it's like based on the sum of its parts. I think i80 has always been cheap in a sense. It's just that when you don't get anything for it valuation wise, if you have 4 good projects, maybe the market will give you, I don't know, some credit for one or something, and you're spending money on all of them. So it's like you're not getting much for it because it's spread. The money you spend is spread across a bunch of assets, and the problem is it would be totally different if they had, let's say, they had 4 super low capex projects where it's like, okay, the market doesn't really care, don't give us much for the value we create across 4 assets. So we're chronically undervalued, so we have higher dilution than we should because we're not getting much for the progress at the 3 of the 4 projects, for example. But if they could put those into production, let's say, then and then start to self-fund themselves, for example. So it's like, yes, you might be undervalued at first, but then you get into free cash flow and you internally fund it. I mean, that's kind of what I like about Integra, because Integra is going to be cheap because they have multiple assets, because the market is not going to fully value all those assets. If they split up the company, if they split up Integra in 3 different companies again, they would trade at a higher market cap than Integra right now. But the thing with Integra is that they now have a free cash flowing mine up and running that could fund at least part of the development of the other assets. So in a sense, okay, if the market is undervaluing that, but they have internal cash flow, then it's not as punishing, and that can still unlock stuff that's gonna hit the cash flow statement down the line. And if you bought it when you could buy the whole thing for a very cheap level, I mean that's how you basically make money. You're front running the fact that the market is not pricing in the potential cash flow of, let's say, the 2 other bigger assets, but you think they could get that into production without super amount of dilution. Then that's the alpha you're capturing. You're being more patient. You're seeing what's going to happen down the line when the market doesn't really care. In this case, that might be one of the opportunities here. But again, it's hard to say because it's a complex situation where they need to sort out the financials first. So I would say Integra is much simpler in that sense. Since they're not in crisis mode, they have 30 million and a free cash flowing asset. i80 Gold does not. Anyway, not sure. Cabral identifies 5th gold in oxide blanket and trenches 18 meters of 0.9 grams per ton gold on surface at the Jerimum Cima target QQ Gold District, Brazil. Surface trench at the Jerimum Cima target at QQ returned. I mean, that's obviously a great trench. A bit, what do you call it? Smeared, given that 1 meter is 22.8 grams per ton. But still, I mean, oxide blankets, you probably could make money on 0.3 grams per ton, so I don't think it's a problem. The trench also returns results of 0.8 meters of 47, 3 meters of 0.5, 2 meters 0.3, and 1 meter of 2.4. The results, together with previous reconnaissance drilling, indicate the presence of a 5th gold in oxide blanket QQ tower, which appears to extend over an area. I mean, that's a pretty big area. 900 by 1,000 meters. The other gold in oxide blanket waiting for central blah blah blah. on an indicator resource and were included in recent pre-feasibility study. So yeah, I mean the PFS that came out became a liquidity event of sorts, but that's way underselling the oxide potential. So it's like a snapshot that's way smaller than it would be, but they have to start somewhere, right? And that's the idea of it. It's like to get a saprolite operation up and running, then it doesn't really care. Then it's going to be cash flow, and if they can find more stuff, so it's not the total picture you get in the PFS because it was limited to central MG. So that's going to be understating the potential of the oxide, obviously. Previous reconnaissance drilling at the Yerma Sima target to the east of trench return gold was 14 meters, 0.6, 20 meters, 1.2. Yeah, you can read this yourselves. I mean, ever since I think it was the first article on Cabral, I mean, the case was kind of simple, that, okay, there's historic placer workings all over the place. They have, I don't know how many targets they have. Some have been drilled with good success and haven't been followed up. So like there's gold shedding all over the place, and they're finding these oxide blankets, yada yada yada. So, and as they show, I mean, the more they look for gold, the more they find, and I don't see that changing anytime soon. So it would be great, obviously, if they can get oxide saprolite gold production up and running, and then self-fund themselves to actually go out and, yeah, I mean, they have their own internal cash flow, and then they go out and prove up that this is like, 3 to 5 million ounces or more, and keep finding oxide gold, yada yada. So that's the long-term picture, the long-term risk reward. There's no doubt there's a lot of gold here. They've already proven that. They've proven they should be able to make money on the limited amounts of oxide resource they include in the PFS. So if we come back 1, 2, 3 years from now, this should simply be bigger. Hopefully it will be in production as well, and hopefully they just keep growing, and down the line I guess G Mining would take them out. So not much has changed with this news release. It's just that it's basically, I don't know, confirming the picture. It's like, yes, there's more gold here. There's more gold here. The PFS is underselling the oxide, and they're finding even more oxide beyond the inferred oxide potential. Borealis drills 4 grams per ton over 21 meters within 2.25 grams per ton gold over 99.1 meters at historical Graben deposit. Please announce results from several drill holes at the Graben target complete as part of its ongoing 3,500 meter drill program at its Borealis Gold project in the Walker Lane Trent, Nevada. Large width highlights include 2.2 grams, 2.25 grams per ton over 99 meters, including 4 grams per ton over 21.3, 2.11 over 36, including 8.24 over 4.6, and 2 grams per ton over 27.5 meters further down hole. Hole 8, which returned 1.58. Kelly Malcolm, CEO, comments, "We're pleased to see large widths of strong grades of gold at the Graben historical gold deposit. These intervals confirm and expand upon known historical results, which indicate a large body of near-surface gold mineralization. We intend to return to the Graben area early in 2025 to test for additional high-grade shoots and attempt to grow the system, especially to the north where it remains open. The Graben zone is particularly intriguing in that Borealis is already permitted to conduct a 55,000-ton underground bulk sample, which was proposed to be completed through a ramp in the adjacent Freedom Flats pit. Borealis is also very busy on many other fronts, including continued oxide-focused RC drilling on the western portion of the Borealis project, geological mapping, sampling, residual leaching or existing permitted heap leach, and planning and preparing for crushing our 330,000-ton stockpile of oxide mineralization from prior operations and resumption of mining with our fully permitted mine site." here are some of the hits, and there, I mean, some, especially some of the historical hits are pretty crazy. But it's like, okay, they're proving that there's obviously more stuff here. I'm not 100% sure if I would assume this is sulfide, not totally sure. Which makes, I mean, you would need higher grades thanks to that. So it's like the numbers in a vacuum are obviously great. I mean, 4 grams per ton over 21.3 meters, for example. I mean, that should work well, I think, even for sulfide, for example. But the low-hanging fruit should be more drilling up more oxide, because this was a very profitable oxide mine back in the day. And I mean, even if you found 100,000 ounces of high margin oxide, that's obviously a big thing for a small junior. And the sulfide potential is more like I would say the blue sky kinda potential, like the exploration potential. And that's basically what I think they set out to, paint that picture. That's like, okay, we're an explorer. We're really, it's an exploration story, but it's underpinned by the fact that they have a fully permitted mine, already have resources. I mean, the historic resources, I think 2 million ounces or something, which is obviously, I mean, 2 million ounces is nothing to sneeze at. I think a large part of that is sulfides, though, so it's not like they have 2 million ounces of high margin oxide gold. But they have, super good backing, tight share structure in Nevada, a permitted mine. I mean, they could basically, if they decide to, they could start production at any time. But it's like for the, let's say, home run kind of thing, if they only have the Borealis project, it would probably be to prove up economic multi-million ounce sulfide deposit on top of that. Not saying that I mean, if they would mine like 500,000 ounces of gold, I mean, that could be very material at today's gold prices. But yeah, so I think it's kind of a hybrid story, and they've said as much that I mean, if you look at the people who are involved, it's like the directors, and you have, I think, the founder of Kinross, if I remember correctly. They have McEwen, they have Sprott, and they have some heavy hitters. And the idea is that what they've said, they want to build a mining company, basically. And they've said that they're out there looking for other assets. And now, given that most juniors have been flushed over the last 2 weeks or whatever, maybe that's going to make a potential deal even more probable, to get let's say, a cheap deal. So I would expect things to change, let's say. I mean, I don't think you should look at Borealis as just the Borealis project. I mean, you're I would say you're buying into the vision of the company, that they don't want to be a one asset gold miner, let's say. They want to build a company. They want to grow in a time where every gold junior is basically selling for dirt cheap prices. So that's what I mean. Again, there's a couple of different stories. You have the production story of having a permitted mine that could get into production very quickly. You have the sulfide potential of an area with a very large footprint of high sulfidation epithermal mineralization. You have additional oxide gold potential that's hopefully very low hanging fruit if they can again prove up that. I mean, if they found a couple 100,000 ounces of oxide, that could be very, very material for a company this size. And then you have the actual growth plans of like, yes, we would like to build a multi-asset gold miner. M&A, consolidate, kind of like Integra has been doing, which I mean, that's exactly what I would be doing in a low price, high value environment where gold is where it is, but the prices of the assets are where they are. So yeah, I mean, and I won't say again, same with Cabral. It's like nothing super material. It's just that they're doing what they set out to do. Brixton Metals announced fully subscribed flow-through placement of up to 6 million. This is the kind of stuff where it's like, when you hear about people saying that there's hedge funds that's shorting a bunch of juniors, let's say in Europe or whatever, and then they come up to the company and it's like, hey, want some money? And they cover their shorts, basically. Brixton seems to have been one where it's like, well, they have a pretty high burn rate. I mean, and I've said this before, I've written it up. I mean, it's absolutely crazy. And I've talked to, for example, a very smart CEO of another explorer, and he said, Brixton is very interesting. It's like, why wouldn't it be? I mean, you got BHP that's funded them twice, and they have a 35 million market cap. But this is the thing with these markets. I mean, if Brixton was private, it would never be trading at 35 million. Because you couldn't have all of these people, let's say, front run of financing and yada, yada, yada. That's and I've heard people say that, like most juniors, especially explorers, should be private. So you don't have to go through this kind of, dilution spiral where it's like, oh, people know there's not a lot of capital going around in the business, so they can almost risk-free short it. And then I'm not saying that's what happened here. I'm saying it's like you start to wonder when you see stuff like this, and they slam the stock price to, again, levels which makes no sense given BHP's participation, and then they give them some money. And it's like, okay, that lasts for a while, and then they go in and do the same. And of course, Brixton doesn't want to raise a super large amount at, multi-year lows. So this is more like sad to see, because like they have top tier potential simply because Brixton or BHP has been involved, but they haven't had that barn burner hole yet that makes forces the market to care, like we saw with Hercules Silver, for example, which was able to plow through all those shares. I mean, I know quite a few people who didn't buy it because there was too many shares outstanding, but it just took off. Barrick got in. Momentum was like higher, obviously, because the Barrick's involvement just lit it on fire even more. And then after that, the subsequent holes didn't really live up to the discovery hole, let's say, or the thesis. So you have a reason for why Hercules also went down. And one could say, yes, okay, Brixton hasn't had that kind of home run hole that's like, oh, now BHP is going to for sure take them over. But I would say they have been punished way more than they should, in a sense. But that's what happens in a low sentiment environment, and together with potentially some shenanigans. And when people know, in order to do these holes, this kind of BHP type exploration, they need a lot of money. So it's like, everybody knows they're gonna be needing to take in money. So if you think, if I can get into a placement with warrants, etc., I would want the share price to go down. Maybe I can short it on the way down, make money on that, and I can cover my short position in a financing and, let's say, get some warrants. Half a warrant. So I mean, it's excuse me. I mean, it makes sense if that stuff is happening. It makes total sense. Because like if there's not enough retail buying typically right now, so it's like how are you gonna keep the market honest if there's if there's people that can almost not risk-free short it, but yeah, I hope you get my point. So this is what happens in a low sentiment environment, and this is why you can at least on paper for a while lose so much money in juniors, because it just becomes a negative spiral, and it's unattached really to, let's say, the merit of the projects. It's just the flow of funds and the lack of buying, and the let's say, if somebody has money, it's like it's not hard to take a stock down if there's no buyers. And then if you're the buyer at the low in a placement, when the, let's say, a company has a hard time raising money, so they'll happily accept you. So you're creating your own destiny on the back of everyone else, I was gonna say. But hopefully they will be able to do that. I mean, they have some, they have the JV with Ivanhoe as well. Again, it's like that's not reflected. They optioned out the project to Eldorado Gold, if I'm not mistaken, the Aitlin gold fields. Hopefully something can come out of that. So they're a bit like, they're a multi-asset junior that gets no credit for the other two and barely get credit for their flagship project. So that's just how this sector functions. Okay. Line 1 commences development of high-grade roskilite zone at the Tuvalu gold mine in Fiji. So they're going into not a 500 zone, but a new roskilite zone, which is expected to be high-grade. Stock sold off, and I would think that has to do with the fact that there wasn't any real update about how things are going, if you know what I mean. And I think people just instinctively imply, it's like, well, typically you highlight things that are going well, or the best things, for example. And this is just that's how I read the reaction. It's like, okay, here's an update on this, and it would be great if they get into the high-grade roskilite zone, and let's say that's a very good and profitable zone. But it's like, I think people are mostly interested in, it's like, well, how is it going right now? Have, some of the issues been fixed, for example? And since that is not really covered, I think people assume that, okay, maybe things are not doing so great, but they expect it to get better when they get into the new roskilite zone, for example. That's just my read on it, because I mean, in itself, it's not like this news release is bad. I think it's, plus the sector is kind of shit now, so. But I think it makes sense that it's more what wasn't in the news release, I think. That's been the focus by the market. Silver 47 is listed today, actually. That's a new silver play, ticker AGA.V. This is one of few silver juniors I own. Let's see if I can. Look at a presentation. Again, this is not investing advice. I own Silver 47 since it was a private company, and that's like, I'm not 100% sure, but I think I participated in a financing like maybe 2022 at, I think, 80 cents. I think they did a recent placement. I had no money at the time. I think it was done at 80 cents as well. Or maybe actually I participated 75 and then the next one was 80. Anyway, this, in my opinion, goes to show that like most juniors should be private. Because if they're private and the only trading is done at fixed appointments, I was gonna say, you don't get punished by, I mean, there's nobody can really front run it, because nobody can just dump the stock and then, I'm gonna buy it back at a lower price, get an even better position and warrants from an even lower price. So all that shenanigan and let's say shorting and the ice cream truck, all those shenanigans. One second, I'm gonna close the window. Those shenanigans doesn't happen. So I swear, it's like almost every private company I've invested in over the last 3 years, they've been raising money at least around the same price, share price, if not higher. If you look at the public market, almost no private junior, whether it's copper, gold, silver, has not been raising money at lower and lower prices. So why is that? Is it just that the private companies, they're just that much better? No. It's because they aren't punished by the shenanigans in the market and the short-term traders and all of that. So it's like that's actually how, and I've heard other CEOs say that. It's like most juniors should actually be private. It would be, in a sense, a much more efficient market because like the public markets, as we can see from the crypto craze, I mean, they're absolutely crazy and mostly as momentum traders. And nobody actually cares what anything is worth. When you do a private, private placement in a private company, you actually have to think as a long-term investor. It's like, oh, how much is this case worth? What's the potential here? Would I want to would I want partial ownership of this asset? Not just, oh, I'm going to buy this so I can flip it next week or in a month, or I'm going to short it so I can, whatever. So it actually forces participants naturally to be more long-term oriented. Anyway, the interesting thing is that I actually bought in when their flagship project was the Michel MVT ZX project. And they had some stellar results, as you can see, 50 meters of 907 grams per ton AG, 29% lead and zinc. That was the flagship project. That's why I invested. Then there were some shenanigans with the locals, maybe the Indians or what you would call them. So they didn't get access basically. So as this story was kind of getting better and better, which is like, oh, one of the best silver exploration projects that I was aware of that got me to invest, they didn't get to explore it anymore. So then they acquired the Red Mountain VMS project, still while they're private, from White Rock, if you remember that story, which had, I bought in for the Last Chance Gold, but they also had a very impressive VMS, and they later merged and picked up that mine in Australia and stuff. So they also had that problem where they were working 3 assets, 1 unprofitable gold production. It's like an i80 but in a tiny scale. And they got nothing for it. They didn't execute on the Morningstar mine. I'm pretty sure they actually went bankrupt. So their unprofitable mine, spending money on many projects, led them to go bankrupt. So their loss, my loss, but at least Silver 47 picked up the Red Mountain VMS project, and that's a quite impressive VMS project. Here you can see some scale comparisons, VMS districts, to other famous ones. So it's a very large project in Alaska. They already have 168.6 million ounces AG equivalent, and it's like, what gets me going from an exploration standpoint is that, I mean, this is a pretty big resource to begin with, but their exploration target is 50 to 75 million tons instead of 5.6, 3 to 400 grams per ton AG equivalent, 500 billion to 900 million AG equivalent ounces. Of course, that's just a exploration target. That's like, hey, this is potentially what could be here. but they also, and here you can see some drill results. But here you have a bunch of targets, some geochemistry. This is rock and soils for silver. This is rock and soils for copper. This is rock and soil for zinc. So obviously there's a lot of metals slushing around here. In kind of a circular feature. They've already drilled here and here. That's where the resource is from. Gallium, a new target where they're finding, 1,000 grams per ton silver, 62, 67, yada yada. I mean, their VMS can be tricky to explore for, but they already know. I mean, they already have something. They already have margin of safety in the current resource. Is that big enough to be a mine here? I don't know, but it's like, would you expect it to grow? Yes. I mean, looking at this picture, you would expect it to grow. So I would say Silver 47 has very high. I mean, theoretically, they could find another. They could have another world-class VMS district, and these were obviously worth a lot, like 55 years production, 262 million tons. 65 years production, 90. I mean, these are all legendary camps. So it's like they could be sitting on something that will have immense value. Is that a guarantee? No, but they're starting with 168 million ounces AG equivalent. And the thing is that I think there's something going on in the court or something of in terms of getting back the Michel. Did I have Michel? Okay, these are other targets. Okay, they don't really highlight that, but I think there's a chance they could also again get access to the Michel project. And the interesting part about that in that case is like it was Michel that alone carried the entire market cap when it was private and when I bought in. And now they have a more de-risked, equally large exploration potential in Red Mountain. So what if they get Michel back as well? Then they have two flagship projects all of a sudden, both looking really good. Then there's, I guess, the potential to, spin out if they want to, because again, this was the original flagship project, and then only reason they had to take this in was because they weren't allowed to do work here. But if they open up that as well, then they have two flagship projects all of a sudden. Then I think, I already like Silver 47 at this valuation, but then it's like almost, I was going to say double their value overnight, because then they have they get access to a project that carried 40 million in market cap privately, let's say. What's the market cap right now? I don't actually know. I think it's around 40, 45. And I would say also, since there's been quite a few people who've been in Silver 47 from its private days, plus, if I remember correctly, we got warrants as well, plus some, let's say they bought in for Michel and don't care too much about Red Mountain for some reason. So I would don't be surprised if there's some selling. And it's like, I have a position, I haven't decided really. It's like, should I be adding? But again, I think this is a situation where you're gonna see some pent up selling for no other reason than, well, many reasons. They haven't been able to sell any, and maybe things have changed. Maybe they don't even want to be in juniors anymore. So they're, people who wants to liquidate their position don't care about what the actual, company has, let's say, because it's obviously should be worth more now than when they only had Michel, which was very early stage, and they might get Michel back. So I don't know. We'll see what happens, but I don't have it in the hodl folders yet because they weren't participating. But I'm gonna be looking at maybe picking up some shares here, simply because again I think there's some selling that again has nothing to do really with the projects at all. It's just that if people can sell, some will, and especially if they have warrants, for example. You see that all the time. Oh, Integra Resources completes. I talked about this on K Report. Completes transaction with Florida Canyon Gold, creating a new Great Basin metals producer. I think I haven't gotten my Integra shares yet, but I think the enterprise value is 214. I think they have like 30 million in cash or something. So I'm not 100% sure. Is this reflecting the new? Because I mean, then it's just absolutely insanely cheap. I mean, heck, I think Florida Canyon has an NPV of higher than this enterprise value alone, without any growth, for example. So yeah, Integra is a top 4 holding in the HODL folios. You get basically one mine, 2 mine-worthy projects in the US for the price of one. So I mean, how much risk is there? They already have 3 economic projects. So that's kind of crazy. I mean, that's why. And of course, the beauty of it being that, well, one asset can unlock the other one. So even if the market just prices Integra based on one and a half of the projects, but if the market can get punished thanks to, well, okay, if you ignore the value of the other ones, we're gonna, build it and force the value higher. I mean, that's basically what you're front running, I would say. And I think they're gonna focus on proving up more at Florida Canyon, just extending that mine life, because that's obviously a big thing in a $2,600 gold environment, to have extend an operating mine. And in this day and age, it might take years to even get a mine up and running, if you're even allowed. So yeah, I think Integra is crazy cheap. I like the fact that they're in the US from the jurisdictional premium, and hopefully in, like, I don't know, 3 to 5 years, they might have 2 to 3 mines up and running. And if gold is even close to these levels, when Florida Canyon's costs have gone down, let's say Delamar is up and running and has a lot of silver, and let's say silver is doing well, or whatever, I don't see the market cap being close to this level. I mean, that's why it's in the HODL fold. It's a long-term bet that this valuation is going to look very cheap in, let's say, a couple of years, and that's how you make money, focusing on what the market is ignoring right now. Oh yeah, just touch on Red Canyon. Excuse me. 5th of November, they announced that discovery of a significant copper molybdenum mineral system at its 100% owned Kendall project. So this is the Newquest group. That's the same group that founded Inflection Resources, which got Anglo Gold to do an absolute stellar deal. It's the same group that founded Headwater Gold, which got Newcrest and Newmont, and most recently Centerra Gold to invest. So when it comes to exploration in the junior space, these are some of the best of the best. They have Craig Hart from Snowline as well on board of this. So they only drilled 4 holes, and this is in BC. They only drilled 4 holes and already hit a copper molybdenum porphyry. I mean, these grades in themselves might not be eye-popping, but I mean, obviously these doesn't fall from the sky. It's not like there's background level. So there's something there. They've tagged a copper molybdenum porphyry in BC, and I think the market cap is $7 million CAD. So I participated in this also when they were private. I think I bought in at 22 cents or something like that. I mean, there's almost no trade. Well, there's 38,000 shares, but there's not a lot of liquidity. But this is already now. I mean, they drilled some holes before at, I think, another target. They didn't hit much. They have a bunch of targets as well. I mean, they're doing the Headwater Inflection way of exploration, where it's like they know exploration is a numbers game. So they have several projects, one super big one actually in Nevada, So they're just prodding and testing. They want to drill and kill quickly. So they drill this, and now we know there is something here. Are they gonna do a deal with a major like they've done with their other companies? Not 100% sure. But this all of a sudden got very interesting. And of course, the main driver is they made a discovery in a sense. I mean, it's not a quote discovery hole maybe, but like they have confirmed their support for here, copper, molybdenum porphyry here, and their market cap is 7 million CAD, which is absolutely nothing. I mean, these guys are like their sister companies. I mean, they are after world-class deposits to be sold to a major. So, I mean, obviously, I mean, if you look at the share price, for example, it didn't even react on it. So that's the market we're in right now, and that's why it's. And I've said it before. In low sentiment environments, it's like being an insider. You get to see the news. You get the companies to scratch the lottery tickets. You get to see the news, and you don't have to pay up for it, which is akin to being an insider in the sense that you can buy at the price before people saw the news. But in this case, it's just that nobody cares about the news. Nobody reprices the stocks based on the news, and you can, yeah, I mean, basically you get more value for the same price, which is fantastic. Like many high risk, high reward stories, it's not a huge position. I have a decent position, but it's like if Red Canyon finds nothing, it's not going to affect my portfolio much. If this, for example, turns into be a significant discovery and is going to get bought out by a major one day, I would expect to get 20-30 bagger from it or something. And in that case, even a small position would materially affect it. I mean, maybe I should be buying now, buying more because of this news release, but I haven't really decided yet. And as always, I'm always fully invested, so I have to decide what to sell in that case. Then we have First Nordic announces 10 million bought deal private placement on October 30. I think the stock was trading at 36 at the time, and there was some belly aching. I mean, yes, preferably I would have had them, the placement at 40 cents or whatever. But it's like, and I said it in the forum, all of the last 5-6 placements I've been in have all been at some discount to the market, and they've all had either half a warrant or a full warrant. In this case, it's only half a warrant, and it's also a bought deal where it's Haywood promises that they're gonna get 10 million. So I don't know. They did announce this just before the market, the gold started to go down, and the juniors some got washed by 30%. So perfect timing from First Nordic. They did it at a local sentiment high in the sector. A bought deal, so basically Haywood promises like, yes, you're gonna get 10 million. And I don't think that's gonna be a problem at all. I mean, and I've been saying this, I mean, anyone worth their salt in terms of big money or funds or whatever should, in my opinion, be able to spot that First Nordic is one of the absolute best gold junior cases in the entire space. I mean, personally, I'm still dumbfounded by the fact that there's not more people talking about First Nordic on Twitter or anywhere else. It's like I've been doing this since 2015 with good success on overall, and I have tossed and turned this case a lot, and it's, yeah, I mean, I can just look at my position size, for example. It's hands down one of the best risk reward I've ever seen in the gold junior space. And I'm biased. I'm Swedish. I think it's cool that they are in Sweden. But it's like, when you just think about it, they have probably a top 10 undeveloped gold asset in the world, in an area where the costs are low. So this, again, I think they have another young Davidson mine, which was the flagship mine for Alamos Gold for a long time. They bought it for 950 million at the gold bear market low in 2015. So what do you think that's worth, at these gold prices? Huge land package, larger exploration targets than most juniors I know. So you have like immense exploration potential. You have immense margin of safety because they have an asset that Agnico has been working on for 9 years. So you can just imagine Agnico level prep work with water studies, community relations and all that. You can't buy that stuff. I mean, it's only Agnico. Agnico are the best in the business. So what that's worth, I mean, no junior would do it as good as they do. And they've had 9 years to prepare. And then they have the Ojärvi project, ex-Agnico asset in Finland, which is pretty much and many juniors would love to have that as a flagship project. And you have a market cap of 72, then add the placement, so let's say, I don't know, 80 million or something. It's ridiculous. I mean, the gold line targets alone, the 100% own, when this sector was harder, gold line on the IDA discovery traded up to 70 million alone. No Barsele, no Ojärvi. I don't think they had Ojärvi at the time. Maybe they had an option on 70 million. I think Barsele Minerals, when they only had the Barsele deposit, I think they traded up to 200 million. So that's 270. And then add Ojärvi, which is like, I think, easily could go to, I mean, if it becomes a mine, it's going to be much more than 20, 30 million. But let's say 20 million. It's just crazy. So it's like, let's take away 20 million for Ojärvi, because I think it's the highest undeveloped gold deposit in Finland right now. Then you're down to 50 or 60 if we add the dilution from the placement. Then we're down to 60. Then the 100% owned target, which is like, given the size of them and they already have a discovery, let's not give it 70, but it's like 20, 30 million. Then we're down to like 40 or 30 million for the Barsele project and the Barsele deposit. That is absolutely crazy. This is like a top 10 gold project in the entire world undeveloped. That's a flagship asset for any mid-tier. For, let's say, 30, 40 million CAD. That is absolutely crazy. I mean, at today's gold price, well, at $2,000 gold, I think that's worth over $1 billion. So yeah, you can. I hope you understand why I love the risk reward. And again, pretty much never seen better risk reward. You have an advanced Agnico worked asset that's worth multiples. Even their 45% interest is worth multiples of the current market cap. And you then, by definition, you get those immense exploration targets risk-free. Plus, you get another belt in Finland, the highest grade undeveloped gold deposit in Finland with obvious exploration potential, since they only drilled it down to 200 meters for free as well. Most of the time in this sector, you have high risk comes with, or high reward potential comes with high risk. Here's like margin of safety that's X times the market cap. Then you have all the exploration potential in gold line, and then you have the deposit and exploration potential at Ojärvi. I mean, I cannot find a gold story. I mean, Integra is pretty much close. At face value, it's kind of the same thing. It's like you're buying all this margin of safety, way less than it's worth. And then you get all the exploration potential for free. And in Integra's case, you also get Red Canyon. It's actually Red Canyon. Funny, it's like the same name as the Red Canyon company. But that's a Carlin discovery. Homerun. The bashers are back. Homerun has been putting out a lot of news. They put out memorandum of understanding with local partner for the processing of high purity silica. They put out a memorandum of understanding with Campagna de Navegação and Norsul for the maritime transport of high purity silica sands. They put out a letter of intent with Veracel Cellulose for the development of logistics setup and community relations of the high purity silica sands originating from the Belmonte district. And now they put out today, Homerun Resources reports discovery of HPQ silica sand. What I would want to focus on is this one, Veracel Cellulose. The other companies, like local Brazilian companies, or not even maybe international Brazilian companies, was like, I have no idea. I've never heard of these companies, obviously, because I'm not Brazilian and I don't live in Bahia. Veracel Cellulose, though, that's where is it? Maybe it's not in the news list. Anyway, Veracel is 50% owned by some company, I don't remember, but 50% of it is owned by Stora Enso, which is a Swedish Finnish company, very well known in Sweden. $8 billion market cap. It's actually the world's oldest limited company. It's been around for 700 years. So everybody in Sweden knows who Stora Enso are. And they're the half owner of Veracel. So it's like, that is as legit as it gets. And, typically, especially, Swedish flagship companies, they are very good. So this is a big thing, that they have basically a half-owned subsidiary of Stora Enso to have a letter of intent with, because they're not gonna mess around. Swedes have we have very good companies and we're serious. That's it. Swedish quality overall is very high. So that's a big thing. So now everything is starting to feel very real, basically. So hopefully this will help them a lot on like lowering costs or whatever. So it's like they're obviously right before our eyes, they're putting the pieces together to create a pipeline for phase 2. And that's not the verticals, that would be the sorted and washed high pure dust silica shipping. And the verticals alone are, could obviously be company makers with the femtolase or whatever. But to see them beef up or like put the things together for the underlying base case of high purity silica, because after they wash and sorted, I think they get up to 99 something % purity, which is ultra high, or not ultra high purity, but it's like very, very high purity already. Then to get up to 349s, they might need a femtolaser, whatever. But if only this works, you could have, given the resources they have, if when they get this up and running, who knows, maybe they have 100 years supply and potential 100 years of dividends, if nothing else, and then you add the verticals, etc. So this is one, top 4 in the HODL folios. This is to me a fire and forget story, because they did the placement and now they're pumping out news. So fast forward 1 year, 2025, maybe they'll already be in cash flow production by then, and I think we're gonna be hearing more from the verticals at that point in time. So this is simply a case where it's like no guarantees, but I think 1 year from now this company could be worth a lot more and have production. 2 years from now it could be worth even more. Then we're assuming maybe some verticals, yada. Then we have the solar glass thing, which I think is that for 26, 27, whatever. And in the meantime, obviously, more verticals, yada. So again, this is a fire and forget story for me. You can only lose 100% of your investment. You can make potentially a lot, and typically, any, let's say 10 bagger typically takes 3 to 5 years. So, or the average 10 bagger, I think. So the thing is that if I hold it, if things go well, I expect to make more money the longer I hold it, up to at least a certain point. But given that this is not really a resource that's gonna run out anytime soon, so it's not like you have a 10-year mine life and in year 5 you only have half your mine left, if you know what I mean. So hopefully this is not a perpetual moneymaker, but it's like if they get things up and running, given the resource base they have and how exceptionally high quality it is, hopefully there's going to be demand for their stuff for decades to come. And this is basically the underlying base case cash flow that hopefully is going to turn into reality. Yeah, so that's about it. There's even more news out there, but I can't make these videos in, super long. But I would also just, I guess, touch on like Goliath, as we can see, came down with the market, but we're still waiting for pretty much all assays. So now I'm looking at Goliath, or maybe like, I don't know why, people sold. Maybe they got bored for a while or forgot that there are assays coming or something like that. But this is starting to, and of course most units that go down. I mean, if everything gets cheaper, it's like the interest goes up for all of them. But at least for Goliath, this is also one where it's like, okay, could be quite material. You're taking assay risk. So there's no guarantee that the assets will be good, but it's like I think they're like 36,000 meters of drilling. So I don't know how many news releases that's gonna be, but we've seen a bunch of smart money invest very recently at higher levels. So yeah, now that I think about it, maybe I should go out and pick up some now that it's actually come down, and I have even better odds in a sense on the assays. A bit lower risk, a bit higher reward potential. Anyway, thanks for listening. Consider me biased. I own shares of all companies I mentioned. Some are banner sponsors as well. There's no, as always, there's no guarantees of anything. If I 100% knew a company, I would make money on a company, I would be probably all in. I'm not, especially the higher the risk, the lower the position size typically. And then the idea is that, okay, not much trading, but like in 6 months or a year, I expect that on average I'll be up from these levels on these stocks. On average, not that every single one will turn out well. I mean, maybe in a year, maybe Goliath is at 500 million, maybe it's at 70 million, I don't know. Red Cannon, maybe they find nothing at Kendall, or maybe they make a discovery. Maybe I'm down 30% or up 500%. I don't know. Same with all, really. Yeah. So again, that's the thing. That just when I'm bullish on a story, if I own a company, that doesn't mean I know for sure I'm gonna make money on it, regardless of how long I wait. It's just that I like the risk reward. Simple as that. Not investing advice. Thanks. Bye.